thinking among Fed officials at this point about the Trump effect? You've had this interesting, nice run-up in the stock market, obviously, since the election. It continues. There is a sort of an expectation that there's a more inflationary fiscal policy coming, potentially. How does that change thinking?
Well, the financial conditions are cutting both ways for the Fed right now. On the one hand, we've had a big stock run-up, which is easing financial conditions. But on the other hand, long-term interest rates have risen, and the dollar has gotten stronger, which tightens financial conditions. So it cuts both ways for the Fed. I think, as Nell said, that they're really in a wait-and-see mode. On paper, a more expansionary fiscal policy ought to make the Fed tighter on monetary policy next year, but they have to wait and see what the Trump administration actually delivers. My suspicion, despite Trump's hawkish rhetoric late in the campaign, is that he's going to revert to the candidate that he was early in the campaign, in which he said he was a low interest rate guy. He complained late in the campaign that Yellen was keeping interest rates low to try to help Barack Obama. I think his response in the coming year is he wants the same treatment that Obama got, and he's going to want the Fed to keep policy kind of easy. You know, there's this.
Funny how fast those things change the day after an election.
Especially with an individual like Donald Trump. You know, I think that if he's going to achieve these growth rates that he's been talking about, he's going to need the Fed's cooperation, and I think that's going to be one of the really big storylines for 2017. Is the Fed going to cooperate with Donald Trump's efforts to get the economy growing faster?